Welcome to the Realty Debate. Last week, we brought you the findings of the Real Estate Attractiveness Report by Prop Equity, which demonstrated, based on hard facts of supply, demand, housing, houses sold and the unsold stock, on how the capital's realty markets have nosedived almost to the bottom of the 14 cities across India. However, there also emerged a very big dichotomy. Almost all our panelists agreed that today NCR is the best market from an investment point of view. Historically as well, NCR has given you the maximum returns compared to any other city across the country. So today our aim on the Realty Debate is simple: to find out why this is happening and what's the way out of this log jam. How do you make sure that NCR once again becomes the investor's darling? So that's the realty check that we will be doing. Let me introduce my panelists today. Naveen Raheja, CMD Raheja Developers Limited and Chairman of Naredco. Arjun Puri, MD Puri Constructions. Mohit Arora, Managing Director, Supertech Limited. Ashutosh Limai, National Director, Research, JLL India. And Sameer Jasuja, Founder and MD of Prop Equity. Gentlemen, thank you very much for joining me today. I am just going to read out a few highlights of that report to just viewers have to be abreast of what we are talking about and then get on with the debate. Now, NCR market has been in a state of inertia for quite some time now, at least for the last 2 years. 2014, though, has been termed in the Prop Equity report as the worst year in terms of residential demand and supply. Stagnant growth in income, high interest rates, late project deliveries cumulatively have held back the buyers. Now, developers, on the other hand, have been restricted by the increasing burden of construction cost, land and labor costs, which are not allowing for cutting down prices. Therefore, the big inventory overhang. Residential new launches and absorption levels were at the lowest level since 2009, and we're talking about 2014, that's the year gone by, at only 54,000 units, 50 units above that, and 37,650 units respectively. Final figure, year-on-year comparison during 2014, total absorption more than halved. It dropped by 50% to just about 37,000 units from almost 80,000 units in 2013. So there was a huge slide even between 2013 and 2014. Unsold stock stood at 264% higher compared to 2013. So lots and lots of unsold stock, which went up by 23% in NCR between 2013 and 2014. Now, my big questions are, what's really going on in the market? There are, of course, there are developer issues, there are buyer issues, and then there are NGT, or the National Green Tribunal issues. Sameer, sum it all up for us and tell us, 2014 just looks so bad. Why?
Well, there are multiple reasons for that. I think the first and foremost reason is that the economy still has to start recovering. I think the Modi government is trying to do the necessary steps, but it will still take a while before the economy starts to show real effect on the ground. That's the first and foremost reason. The NCR market is investor driven. The investors haven't seen too much of a return in the last 2.5, 3 years, and they kind of have fled from the market. Either they are stuck badly and they're not being able to get liquidity, or they're not willing to make fresh bets because they're not feeling that they're going to get the right kind of return going forward. The end users are waiting on the sidelines, waiting for the markets to crack up further, primarily because they feel that the markets have seen a drop of 20 to 30% in various areas in NCR. So they feel that there is a higher probability that the markets may go down in the next coming few months as well. The developers are a little cash strapped right now, so they are being able to offer good deals, and the investors who had got stuck in the market are also willing to offer and offload the inventory that they're holding at much lower rates.
Okay, all right. So
some of the reasons.
Some of the reasons. I just thought Sameer would take about 45 minutes and wrap it all out for us, but Naveen Raheja.
Do that if you want.
Naveen Raheja, let's hear the developers talk about it as well. Would you agree and accept that last 2 years probably have been the worst that developers have also seen from a demand point of view in real estate of the NCR region?
Working since last over 30 years in this area now, NCR. Never seen this kind of thing happening.
Okay.
Happening, this is the longest stagnation of realty market I've seen in my life.
Okay.
Reason, end users purchasing power does not match with investors' speculative expectation. Simple.
Okay, I think you've summed it up very well. Arjun Puri, what's your take now? He's saying speculators who were in the market are trying to offload, but obviously there are no takers for that price. So I'm assuming that investors would have moderated the return expectations, and developers also would have moderated at what price should they be launching new projects at.
See, I think it's not as easy as that. I have a slightly different take on this. I feel there hasn't been anything for the end user really to come into the market immediately, because the projects of a lot of developers are not ready. They are still about a year or two away from completion for a lot of developers, and the infrastructure has also not kept pace with what was promised. So if we were all expecting certain infrastructure projects to be completed, you know, 2.5 years ago, those are at a point which they're probably coming now into shape, and they'll probably be ready in the next 6 months to 1 year. So the investor has not been able to find an end user to offload to, because the end user feels that it's still premature for him to come in.
Okay.
I feel now we are at an absolute, you know, inflection point. I feel we are at the cusp of a change, because I feel a lot of infrastructure projects in the NCR are coming to the culmination. They're getting delivered. I think a lot of developers have not, you know, even in this slowdown, you know, developers such as Mr.Raheja, us, a lot of other developers have not stopped construction. Okay. You know, we've kept construction going. So I think a lot of us are 6-8 months, a year away from offering possession, and I think a lot of infrastructure is getting completed. So I think end users will start coming in the next 6-8 months, and I think investors will find that they will have, you know, end users to offload to.
All right, so that's a Gurgaon and Dwarka Expressway market. Let me get Mohit in here and ask Mohit as well. Mohit, so this is one market, and I must say when it came to investors and speculators, probably Gurgaon had a larger number than some of the areas or key areas that you operate on, which are the Noida, Greater Noida, Yamuna Expressway. Of course, you've just launched in Gurgaon as well. Tell me, in Noida, was it always not also an end user driven market, and are the end users also on the sideline waiting for a price correction? What has your sense been in the last 2 years of sales being slow? Is it that the end user has completely disappeared from the market?
I agree with you, Manisha. As you rightly said, the investors are completely vanished from the market, for us at least. We are operating both in Gurgaon and Noida region, but the better part in Noida, what we see here is that there is a lot of end user who are looking for their own houses to live in. They are not so much interested in speculation and appreciation. So most of our customers who are buying into Noida are end user, and they are looking for their own use. That's a healthy sign for a market like Noida. Because of the same reason, there is not much appreciation and not much speculation happening in Noida market. The prices has been stagnant since last 2 years almost. So there is hardly any price increase in this market. As I said, because there is no speculators in the market, there are no investors.
Okay, but more my question to you was, are there end users, or even end users have gone down? What has been your sense? I mean, in the last 5 years, was it that you had investors between 2009 and 13, and from 13 onwards you had investors disappearing? Is that how we should read the Noida, Greater Noida, Yamuna Expressway markets as well?
Exactly, that's what I was explaining, that there are hardly any investors in this market these days. Investors vanished after, I would say, 2012 and 13. There are mostly end users in the Noida market, and that is the reason there is no speculation, there is no appreciation. We can take it as there are both sides of the situation. One is good and bad. Good is that the market is healthy. People pay on time. Projects are getting delivered. Developers getting money to construct the project. But on the other side, the bad side is there are no appreciation, no speculators. The market is going slow since last 2 years, okay. And it's the slow. I would say it's the slowest pace this market could be at.
All right, fair enough. So now I think everybody has accepted that it is an extremely slow market, the worst probably they've seen in 2 decades. Now, Ashutosh Limai from GLL actually had sent us this interesting article. When we are talking about NGT, in fact, when we are talking about Noida, within the NCR market specifically, the National Green Tribunal clamping down on work around 10 kilometers radius around the Okhla Bird Sanctuary hasn't helped either. And of course, the latest order where they're saying the developers are not following the NGT order of clean construction and therefore adding to the air pollution, and therefore construction should stop. So Ashutosh, this has really been another big reason which has added to the already troubled market, isn't it?
I think quite a bit, Manisha, because what happens is whenever such order or direction comes in force, sentiment indeed does get affected. There were 2 different orders which we are speaking now. One was about the bird sanctuary related order, and the second one was about the environmental pollution control norms related order. So what happens is in the bird sanctuary case, when completion certificates were stopped, it affected the secondary markets first because most projects were either completed or in advanced stage of construction. So it was a case where buyers were already present in that market. They had purchased the properties and investors who had purchased to sell it off and exit had problems because completion certificates were not forthcoming. And that affected subsequently the primary market as well. Because as an end user, one gets jittery when completion certificates are not forthcoming, which then lead into delays of projects and the sentiment hurts. Whereas the second order, which was related to stopping of construction itself because of violation of pollution control norms, that actually made the situation worse because everybody knew that delays are going to be much more common. And for developers also it was a pain point because the holding cost goes up, they have to shell out the penalty as well. Both I think orders affected the sentiment quite a bit, and we have seen that sales have further dropped. They were not good in first place, and they did get dropped further, and then people actively thought of Ghaziabad and Faridabad as alternate locations to Noida because of this uncertainty.
Okay. Fair enough. So we've established that there are many issues. Now the big question is, and Sameer, you have to come here. There's a lot of data in front of me, and I'm not going to, push out all the data. But look at NCR. It's a huge market, the largest in the country, way ahead of Bangalore. We say Bangalore's #1, but the launches here, the projects here, or the units here are 3 times of Bangalore. What is the number?
Actually,
or more?
And not anymore. Okay. These were numbers of 2011 and 2012 when we were witnessing new launches at the rate of about 150,000 units overall in NCR, but now it's dropped down to, as we say, 39,000, 40,000. That is lesser than Bangalore.
That's lesser than Bangalore.
Yeah.
So 2014, what did Bangalore launch and what did NCR launch?
So if you were to look at 2014, the numbers of launches in the NCR region were to the tune of 65,000, and Bangalore was roughly about at 50,000.
All right. So the gap is closing. You're saying
Yes.
Bangalore and NCR new launches are becoming almost the same, and geographically, probably NCR is a much larger market, and that itself spells out
Noida
trouble.
alone, just let me add here that Noida alone, Greater Noida alone was probably equal to, in 2011, 2012, was equal to the entire top tier 1 cities put together.
Okay.
That's the kind of new launches we were talking about.
All right. So then let's stick to or come to the demand supply situation. From a demand supply situation, look at the micro markets around NCR and which one seems to be the most under pressure, Sameer, and which one seems to be okay and be able to hold its head above water.
See, if you look at it from a short-term point of view, Dwarka Expressway is feeling a lot of pain. I think if you start looking at Noida Expressway, there's too much supply that is almost getting ready and going to get ready. There are about 150,000 units going to be ready on just Noida Expressway. That is going to see pain because right now there is as Arjun pointed out, there's a lot of completion that is yet to happen. And what we've witnessed in the NCR markets is that the market is not as deep as we felt it was, especially in micro markets like Gurgaon, where 3,000, 4,000 apartments came up and rentals became just half. So that is one cause of concern that I'm seeing in Noida, because unlike what Mohit said, that there are a lot of end users in Noida, which I agree with, but the kind of supply that came up in Noida was purchased a lot by investors well.
Okay, so let me get the developers here. Mr. Raheja, do you believe, or you said that, look, investors' expectations were way more than what the end user was willing to pay. So are we staring at a problem which is essentially that demand is for another product and what developers have been launching is a completely different product?
See,
and to that I would probably come to the pricing question. Have we outpriced real estate in the National Capital Region?
Based upon my experience of lifetime now, almost 3 decades, actual market dynamics is decided by the purchaser and the occupier, that is the tenant even. Whether the return the investor gets or even the owner gets from a tenant justifies the investment made by him in the unit, and what is the occupancy possibility. Number 2, whether the purchaser has the power or the disposable income and means to buy and to afford that kind of unit, be it residential or commercial, whatever, whether affordable or upper segments. Upper segments, at times you do get some variation because of the branding of the product, but actually speaking, the projects are demand based. They are straight connected to the customers' pockets and occupancy.
No. So are you saying, Mr. Raheja, that developers have not gone wrong in launching the product? You're saying that the markets, they could not anticipate the market falling, but the product is right?
It is an oversupply.
Arjun Puri, would you agree?
It is an oversupply. It is an oversupply.
So you're saying,
but since, as already mentioned, last 2 years, supply in Gurgaon has been much less than what it used to be. So the gap is almost completed now. The only last hitch which is left out about Dwarka is the area, particularly in Gurgaon, which is most affected, is the infrastructure connectivities. Infrastructure connectivities are most probably going to take shape now.
Alright, so you're talking about Dwarka Expressway.
No, I'm talking about the complete Gurgaon and NCR market itself. Because my take is, what is the pocket of the customer and what is the supply available. It is demand and supply which decides the price. In between, there may be investors.
Mr. Raheja, are you resting your case saying that there is no mismatch between demand and supply in terms of the pricing, that developers have matched the market fine?
Today the prices are much below than what they should be actually, but unfortunately the actual occupancy rate is not picking up.
Okay, Arjun Puri, hold on. I need other people to. I need other people to also come in. You can come in later. Arjun Puri, would you agree with this statement? The developers have been, have actually predicted the market. Okay, it's just that the economic environment has been so negative that that's the reason why things are not selling. Because that's what I heard from Mr. Raheja.
Yes.
I think we've got it pretty much right. I mean, if you just take a comparative, societies in Dwarka today are on an average a 3-bedroom apartment, 1500 odd square feet, is for 1.80 to 2 crores. Now the average apartment that one is talking about on Dwarka Expressway is 1.20 to 1.5 crore. Maximum. That's the range that people are selling at. So I don't think developers have got it wrong. It's just that the infrastructure has not kept pace. So the Dwarka Expressway has been delayed by at least 2 years, and that's why people have not been able to move in. Now
even in ready projects, nobody is willing to move in. There's no social infrastructure or an expressway.
Well, till the expressway is a reality, which we are seeing now, because as I was sharing with you, a settlement has been reached between the parties, and very soon in the next 6 months we should see the actual expressway taking form. And I feel that people will definitely migrate from Dwarka because those societies really are
Let me come to that a little later, Arjun.
Sure.
I think the question that I really needed an answer to was a demand and supply mismatch happens when either the product is wrong or there is an economic environment which has gone completely wrong. So all of you are claiming that the economic environment has gone wrong, the product is right?
Yeah, I'll just add one more point. If you ask any real estate leasing broker today in Gurgaon, any senior leasing broker, he will tell you this, that there is a desperate gap between demand and supply of commercial ready-to-move-in offices. There's a huge demand for ready-to-move-in offices right now in Gurgaon, right? Now, as these office supplies get absorbed and all these companies start moving in, definitely more and more residential demand will be created, which needs to be filled up.
Okay, Sameer, would you agree? Am I hearing you right, Arjun, that you're saying that there is a glut in commercial, there's a lot which needs to be filled up, and as it is filled up, you'll have residential demand? Is that what you're saying?
I am saying there's a huge demand for commercial. I'm saying
and there's not enough commercial available?
There's not
I disagree with that.
There's not enough ready commercial
there
available.
There are enough boards that I've seen for the last 6 months which are saying ready for fit out, and those buildings after buildings are lying vacant. I'm not so sure about that. Sameer, what's your point of view?
So I just like to add to what everybody said. You see, what has happened is one good thing that has happened with the NCR market is that the developers have launched enough and more projects. There is supply that has got created in the market at affordable price points. When I'm talking about affordable price points, I'm talking about with respect to today for the next 3 years, right? And that supply has to slowly get picked up as the infrastructure catches up in those micro markets, specifically like Dwarka Expressway. When we talk about demand supply mismatch, yes, there has been a demand supply mismatch, and economy has played a huge role in that. Also, that developers kept on launching till the supply would stop, till the demand would stop, and there was no precedent to that. Please remember that 2011 and 2012 has seen more launches in the NCR region than the last 10-15 years put together. So there was no precedent that, you know, who would know how much demand is there in the market, because there was no precedent.
Okay.
So that was the real case.
Okay, so I think that's a great data point to take a break on. We're going to come back. I think everybody, and there were just so many new developers who decided buying land parcels, launching projects in NCR, which seems to be one of the most lucrative and most mouth-watering real estate market, is a great thing, till the whole industry figured that probably the supply was way beyond the demand. We're going to come back, and now we're going to focus on just one thing. What's the way out of this logjam, and which are the markets which are actually going to come out or recover the fastest? This is a realty check on the National Capital Region's market, which, as all our panelists have agreed upon before the break, has faced the brunt of the slowdown which has been felt across the country. But the worst affected has been NCR, and data tells us the reason why perhaps the NCR market slipped the most or came into a deadlock the most was also because it has the maximum number of launches between 2009, 10, 11 and 12, way ahead of rest of the country. Probably the developers did not realize this kind of an economic slowdown would come and affect sales. So prop equity, if it takes a look at the sales pricing and delivery of 16,000 new projects in India's top 14 markets, says that the NCR was bottom, which we just told you, and it also says that projects are often years late. Even the infrastructure around them is only half finished when residents move in. Now, this is some of the important reasons which our panelists established as the reason for a big slowdown as well. Let's go market by market and come to the Noida, Greater Noida market, and tell you what's happened there. A big reason for the Noida market to actually get pushed down into doldrums was also the National Green Tribunal's order of October 2013, which said that developers, even ready projects, could not give possession to the buyers in a 10-kilometer radius around the Okla Bird Sanctuary. Mohit Arora, this has been a big dampener to the industry as a whole and has affected the buyer sentiment in Noida in a big way, hasn't it?
Definitely, Manisha, this issue of NGT, the Okhla Bird Sanctuary issue, has been a real reason for the slowdown of the especially Noida and Greater Noida market for both the existing customers, old buyers, and the new people coming into the market. You'll believe there are almost 50,000 units which are nearing possession in Noida region, which are on hold due to the national NGT issue of this Okhla Bird Sanctuary. They are very near to possession and they are not able to get their completion. So the old buyer, the people who have already bought are in stress, and the new buyer is again scared to enter into the market. But luckily now this problem has almost sorted out, and they have reduced this 10-kilometer radius to 100-meter radius, and we hope to see a lot of improvement because of this issue ending. And we see that because of this issue, a lot of people were holding back to their investments, and now they'll come back to the market and take the decision what they were holding on to.
Okay, fair enough. So, Ashutosh Limai, would you agree that once these 50,000 homes get delivered, Noida sentiments will turn around? There could be a lot more interest both from buyers and investors back in Noida. Great infrastructure, no problems of infrastructure in Noida at least.
Well, I think generally speaking, there is this mismatch of affordability versus pricing, and in these markets, because sales have dried up, the issue is more severe. So if developers reduce pricing, I'm sure that there will be a significant demand that they can capture and convert into actual purchases. But specific to those developers whose construction work has been stopped by this order because of the non-compliance issue, for them the cost is already mounting because they have to pay penalties, and because of the delays, their holding cost or finance cost has gone up. So their margins are already shrinking. So how realistically they can reduce the price is another question. So I think it's a conflict, inherent conflict. But from a pure market perspective, I think price correction is the only way of getting back that demand.
Samir, what's your view?
See, my view is very clear that and very simple, that I think Noida has clearly got a huge oversupply.
Okay.
Compared to the kind of employment generation that is happening in Noida, the supply far exceeds the demand. If you look at Greater Noida as a prime example,
so in a way it's great for end users, isn't it?
It's great for end users,
but not an investor market.
I think if the developers would not have launched these kind of units, if you remember, Noida Expressway 5 years ago was at 8,000-9,000 rupees a square foot. So today, thanks to the developers launching so many projects at lower rates, at least affordability has got maintained in the market. Gurgaon, for example, or any of the micro markets, if you look at in Delhi, there was no supply. Thanks to this supply, the markets will remain stable, and it will be an end user driven market for at least 2 to 3 years to come, if not more.
Samir, I do not agree to your point of oversupply in Noida, Greater Noida market. Definitely the volumes are much higher than any other market, and but the sales at the same time is not bad. We sell almost 300 apartments as a group in Noida, Greater Noida market, and if we compare the sales to Gurgaon market, it is less than 50 number of apartments in Gurgaon. So the mismatch is not there. Definitely the volumes are very high, but the sales are also in comparison. The only reason why this is so is because the right price point, which is missing there in other markets. In Noida, Greater Noida market, the price points are right. They are in affordable range. Person who is earning 50,000 rupees a month can also think of buying a house in this market, which is nearly impossible in other markets like Gurgaon. So I beg to differ from you that there is any oversupply in this market.
Okay, so what kind of returns would you bet on? 8 to 10%? That's the way Noida market would behave in the next 2 to 3 years, or do you think it would probably be flat till the supply actually gets absorbed?
I can answer that question. So if you're buying into an under construction project around 4 to 4,500 rupees a square foot, a ready property would trade, a decent ready property would trade between 6 to 8,000 rupees a square foot. So eventually what you'll have is a ready market on Noida Expressway, depending on project specification and amenities, trading between 6 to 9,000 rupees a square foot is going to be the broad ballpark figure.
9,000 Noida
Good
Expressway.
properties on Noida Expressway today are above 10,000 rupees.
Luxury segment.
I would call it super luxury, but yeah, okay, if you want to call it luxury.
Luxury segment. All right. Super luxury or luxury on Noida Expressway can even go up to 10,000 rupees. So let's now focus our attention on Dwarka Expressway. This was one of the hottest markets. I love to talk about this market simply because when I started the property show 3 years ago, a market which was just at about 4,000 galloped to 8,000, 9,000 plus within 2 years of doing the show. And I would just keep staring at the figures and look at the mouth-watering returns. Guess what? Hugely investor-driven markets also feel the pain the maximum, and add to that, Arjun Puri has been the fact that the expressway just did not get made. The legal issues around one village refusing to move out did not get resolved. Now, what is the situation, and is this a market that again one can be excited about?
Very excited about. The entire Dwarka Expressway is 18 kilometers long, of which 15 and a half are already built. The last 2.5, as you said, were under litigation. That litigation is finally now, I can confidently say, at a final stage because the settlement has been reached between the parties. The final date is 18th of May and the parties have already entered into a compromise. The parties are all getting alternative plots, and I think the way forward for the government is going to be to complete the expressway within the next 6 months because they're getting all the land.
So you think 6 months, once 18th May things are resolved and these are formalized, it will only take about 6 months, Arjun Puri?
Absolutely. It's less than 2 kilometers of road that the government actually has to build.
Has to build and clear out. Naveen Raheja, social infrastructure. Now you faced the brunt of it. You've actually given possession on Dwarka Expressway and residents or buyers don't want to move in. There is no social infrastructure. Now talking about social infrastructure, a hospital or school doesn't come up overnight. So what will it take? So one is the expressway will take 6 months, but you think there will be big hospital chains and big schools chains also motivated to now start looking at Dwarka Expressway? What's the situation?
There are many who have already taken, in the institutional sector, who have taken these properties and they are just waiting to develop because there was not much occupancy. But as this Dwarka Expressway gets through, you look at it, it is as equidistant as is Chanakyapuri, Vasant Vihar and these posh areas of Delhi. It is equidistant to that on the other side of the airport, and that too on the southern side of Delhi,
Okay.
So these properties are definitely going to command maybe even a better price than even these South Delhi colonies, because these are being developed on a latest infrastructure platform.
Okay, all right, Sameer,
So
do you agree with that?
it is only a matter of little more time.
Okay, 1 year.
And
Are you giving it 1 year for a turnaround?
This market will define as the most expensive and poshest market of NCR.
Okay, will it outstrip Sameer's golf course road or not? I think, Sameer, you have to say, Naveen Raheja says Dwarka Expressway, especially the Delhi side of Dwarka Expressway tomorrow, or at least in the near future, will become more expensive than a golf course road. Is there a possibility that that might happen?
Yeah, well, I would wish for that to happen,
okay.
But chances are little less. The prime reason for that also is that the kind of development and the kind of sales that have happened of projects over the last 4-5 years is more targeted towards the mid-market, and those projects overnight are not going to become super luxury projects.
What are you saying? There's a Michael Schumacher building and then there is all these huge branded projects
there are 25,000 units out there.
Okay.
If you look at the super luxury market of the 25,000 units, they are not more than 1,500 units in the super luxury segment. Right, 23,000 units.
So break up the market. There are, okay, what you're trying to say is that the golf course road is by itself, the nature of projects launched is a more premium and a luxury market, and therefore probably, but if you want to,
primarily the reason.
Okay,
that's
fair enough.
reason.
Okay, will it now that the investors have a reason to return back to the market, do you think they will, especially now that you've seen almost a 15 to 20% meltdown on Dwarka Expressway?
See, I am a big fan of Dwarka Expressway. I've been telling people all along that this is the best time to buy into Dwarka Expressway from a 5-year horizon, not from a shorter time horizon, because social infrastructure, irrespective of Dwarka Expressway getting made or not, the social infrastructure really has to catch up and really has to deliver in that micro market of Dwarka Expressway itself.
Okay. Step in here. What are your counter arguments? One person at a time.
I'd like to add 3 points. Number one, from an investment point of view, The average Dwarka Expressway property right now is priced between 6,500 to 7,500 rupees a square foot.
Yeah.
Over a 5-year time horizon, do we really expect the chances of this going up to 15,000 rupees a square foot more, or do we expect Golf Course Road, which is on an average 18 to 20,000 rupees, even 30,000 rupees, do we expect that to go up to 50 and 60,000 rupees a square foot? What has a bigger chance of doubling in the next 5 years?
So first of all, Golf
Okay,
Course
one
Road.
second, let him finish.
What is
Sameer.
Number
there
two.
in it?
Number
What
two.
is there in it
Yes.
compared
Number
to
two,
Said
yes.
three points,
Number two,
yes.
everyone keeps talking about lack of social infrastructure on Dwarka Expressway. So as Mr. Raheja pointed out, there are a lot of schools and colleges which have taken up land in the institutional belt on the Dwarka Expressway, number one. Number two, there are 3 new rail over bridges being constructed which take us straight into Palam Vihar. Now there are plenty of, there's Columbia Asia Hospital in Palam Vihar, there is Ansar's
Okay. Got the
Plaza in Palam Vihar, there's every social infrastructure 5 minutes away.
All right.
And these rail over bridges are sanctioned and getting built in the next 2 years, they'll be completed. So we'll have access to fantastic
Okay,
social
third
infrastructure.
point.
And the third point is that not every project on Dwarka Expressway is catering only to the mid segment. There are projects, I mean, we have launched projects which are to the luxury segment as well. They are not priced at 20,000 rupees a square foot, they are priced at 7,000-8,000 rupees a square foot, but they are giving you the same amenities as a Bel Air or any project on Golf Course
All
Road.
right. Okay, so I think, Arjun, you presented your case very, very well, and of course the viewers will take the decision, and all the real estate investors who are watching there. Naveen Raheja, if you were to just look at 2 of the markets, and both markets you're present in, New Gurgaon and let's say even Sona Road. So just juxtapose 3 markets of Gurgaon: Dwarka Expressway, New Gurgaon, and Sona Road towards Sona, because the in-between road which is called Sona Road is now, there is no inventory there. Even in resale there's very little stock available. So if you were to take these 3 markets, what would you bet your money on?
I would say maximum appreciation in next 5 years in entire India will be at Dwarka Expressway.
All right.
Let me tell you that one
Okay.
thing. Number 2, as far as Sona Road goes, it will depend upon how the project is developed and marketed. It depends from project to project. If you take it a general project where there is it's a mid segment or low mid segment, there you may not get any appreciation. But look at where now Sona Road itself, where Tata Housing, our company, is developing an integrated township which is giving facilities which are far better even than London.
So you're saying Sona Road, it will all depend on the quality of the
Their
project.
quality and a particular theme and particular, on what basis, principle and demand driven you are making that project.
Fair enough.
So it will be different for a different project.
Okay, all right. Mohit entered Gurgaon market now, so there must be some excitement within your company as well. You're betting on these markets. Where do you think New Gurgaon, Sona Road, where is the excitement?
My take would be Sona Road or near to Sona Road. Reason being that Sona Road is an area where everything is developed, everything is in front of you. There is a marginal risk for the investor or the buyer of these apartments or the housing. There is nothing proposed there. So whatever is there, it's there, and it's well connected with the center of Gurgaon and
Okay.
well connected with the office complexes and the commercial hubs of the city. So I think everything is already there. So Sona, I see there is no risk, less risk, and of course well connected, and
All right, fair enough.
everything is
Half
there.
the price of the
And less than half the price. So
I'd
that's
like to
okay. Now Faridabad, I think one market that we haven't discussed at all. Quick outlook on Faridabad market. Arjun Puri, begin. You've got projects there also. Should we right now stay quiet about it and say leave it?
I think I'm equally excited about Faridabad as I am
Just
about
because you're in that market, you can't say I'm equally excited about both markets.
One thing. We've been operating there for the last 7 years. For the last 7 years, we have been waiting for the infrastructure to come up.
Okay.
It's finally come up. If you haven't visited Faridabad in the last 6 months, you will be pleasantly surprised. Huda has done a fantastic job. All the roads that were there in Neharpar that were supposed to get constructed 3 years ago are now complete. There is the metro, which is opening next month. June is the inauguration for the metro. There are 6 new flyovers which are being constructed by L&T, which should be ready by the end of this year on National Highway 2. So that will, further improve connectivity. There are 4 new bridges which are getting inaugurated next month across the bridge to Nehar Par.
Okay.
There are 5 or 6 new schools which have just opened up in Nehar Par. There are 20,000 new families which have shifted in the last 3 years into Greater Faridabad. So I think everything that we were promising in Faridabad, for the last 4-5 years has happened now.
What about the pull factor which you mentioned before the break? You said, Gurgaon, there is no A-grade office space available and there's so much demand for it, and as commercial establishments start, what about Faridabad? What will it feed on?
Huge number of new offices coming up on the Mathura road. I don't know if you've seen Vatika Mindspace, for example. It's a 10 lakh square feet office complex. Already 2.5 lakh square feet is operational. There's L&T right next door, which has 12,000 employees. There are at least 10
Sameer, is it a dark horse to watch out for, Faridabad?
I would agree with Arjun that this is a dark horse. This infrastructure that has come up now is going to add a big fillip to the Greater Faridabad region. I am very positive there. But having said that, again, supply-demand dynamics today in the next 2 years, you're going to see appreciation for sure in Faridabad, but moderate.
Final comment from Ashutosh.
I think both Noida extension in the eastern side and on the Gurgaon side, the golf course road and golf course road extension, etc. I think on a 5-year horizon, I think these markets will perform well. One thing which is good about NCR is infrastructure is good, and we have seen that whenever we have good infrastructure projects lined up, and in NCR they seem to get completed much on time or with minimal delays. You have more area that opens up.
Okay, on that note, we're going to conclude. So the National Capital Region still holds a lot of potential. I think prices, new launches, prices have come down. There are mouth-watering schemes by developers. Whether it's an investor market or not, it's difficult to actually pin down on that point, but end users are going to get great deals. Let me thank all my panelists here, Sameer Jasuja, for your report and of course your analysis, Naveen Raheja, Arjun Puri, Mohit Arora and Ashutosh. Thank you very, very much for joining me. Interestingly, NCR or whatever, I think Sameer keeps mentioning this, and I must also bring this point. You really have to look at real estate as a long-term investment. If you take last 40 years, take any 5 years, within that 40 years, it's pretty much like the stock markets. Real estate would also have given you 15% returns in some markets like Gurgaon, they would go up to 18%. In other markets, they would be more moderate, but a 15 to 17% is a given if you're looking at it from a 5-year perspective. Those quick gain times are out. But that doesn't mean that you don't keep an eye out for good real estate. Great portfolios have to have both real estate and stocks. And traditionally, we in India love real estate, and there's no reason not to love it anymore. Goodbye and thanks for watching.